Hi, I'm Mark from AUFX Pro Trading. I've just done this video up to just as a walkthrough of FX. Look, I know there's myriads of stuff on the internet. However, I tend to look at things a lot more realistically and genuinely than what we see out there, and all the outlandish claims and gimmicks, of course, that we all suffer through and go through. So firstly, I'm asked a few similar questions all the time. What do I need to trade as far as a computer? Do I need to have all these 5, 6, 7, 8 screens, multiple screens to be able to get there? Quick answer to that, I have two 45-inch dual screens. I have my chart, the MT4 platform stretched across those two there. That does everything that I need. I'm asked a lot about indicators. Indicators are a lagging signal. They're not going to do you justice. So learning all about indicators, I can assure, will keep you in the poorhouse. They are not going to do it. So if you get a chart or someone that's professing to be a guru of trading and he shows you a chart that possibly looks something like this, honestly, how would you like to trade with a chart that looks like that? Do you really believe something like that is going to give you the edge over the marketplace? I can guarantee it's definitely not. Behind, that's what I see on my charts. Indicator tool marked, profit target I've marked on there, and I can see the price action of what's happening. That's what you need, and that's all that you need. On my charts, all I have marked is the indicator tool which I've developed, which works with probably the main strategy that I use today. It's a bar formation strategy. For this tool that I've got developed, it marks it on the chart, but it has to have met 6 predetermined criteria built in. So if those initial criteria aren't in there, you're not going to see this formation marked on your chart. When it marks the setup on the chart, it also labels the stop loss distance. So I don't have to work out what my stop loss, I know how many points my stop loss is. And of course, with your stop losses, they need to be calculated out for every trade. That's what I do. Further on from that, there's a lot of talk about targets. In my view, in my experience, unless you have got a target system that is 80 to 90% accurate, you are never ever going to make significant money. You need to have a target system that you can rely on and that is effective. So when I got to that stage, that was probably one of the biggest single breakthroughs in my early days of trading, was being able to ascertain a target for a trade at the point of entry. Now, once the trade continues, then we have 2 scenarios that can develop. That trade may go on a lot further than where your initial target is. Hence, from there, I've developed what I call extension rules that can extend a trade by 50 and 100%. When I do that, I take by 100%, I'll take out profits at that first level and then let the rest run through, and I'll move my stop to entry. I do not want to let that second half cost me money. More importantly though, after I got this developed, it quickly became more obvious how the market is set up and designed to make traders fail. Okay, the liquidity providers and market makers, they run the markets. They control the markets. If they didn't control the markets and they didn't make money, we wouldn't be able to trade FX the way we do now with leveraged accounts. So they have to make money. So while we all sit here and complain, and I'm probably the biggest enemy of liquidity providers and market makers, unfortunately we need them to make a market. So that's good. which means the next thing that you have to do is you have to learn to work with what they are doing. Do not try and go against what they were doing. So coming back to the tool that I developed, after I used it for a while, I realized there was a lot of trade setups that actually reversed on where my entry signal was, which then prompted me to take a second look at every trade that I take using this particular system. It didn't take long to find that there is a turning or a tipping point in the market that gives a high probability reverse signal. Once the trade's instigated, down the track at a specific point in time, if the bar formation tells me it's going to be a reverse signal, then it sends me another alert. It also then marks another stop loss on my chart. So now I have a situation where I can really manage a trade. So this is where I've taken it a step above where the majority of traders never get to, or all the education material that you see out there never gets to this stage. If I get a trade that has been a perfect trade entry, I'm in a trade, supposing it's a long trade, and at this point in time it throws up another signal. So I've got three choices I need to make. I can now either close that trade out with a minimal stop. I can close the original direction trade out at a minimal stop and enter a reverse trade, which is going to recover pretty much most of that stop. Or if it is a very good trade setup, the perfect setup, the perfect time of day, I will do what is a hedge trade. I will have a trade continue in the direction that I'm taking. I will then place an opposing trade at the specific points that I explained to go the opposite direction. Once I do that, I have got a risk-free trade. So what that effectively does is, if the trade continues to the target, it means I bank a smaller amount than the original distance that I was chasing. If it reverses, the way I have it structured, it should basically cover your stop loss, right? And you'll be stopped out on the directional trade. So what I've done with this is streamlined the whole stop loss process, right? I'm cutting my stop losses down to, at worst case, a third of what they would be. Now, with my strategies, I do not like to come under 70%. I would like to keep them around 75%. It's almost impossible to have something that's 80% success rate over time. Normally it drifts back to about 70-75%. That's fine. So when you're working in those fields, it makes it a very lucrative trade. So once I get a trade that I've got two positions on, I love it. To me, that trade's finished. I can't do anything more with it. It's going to do one thing or the other. I know exactly what it's going to cost me, and if it does cost me 10 points out of a 40-point stop, I can take trades every day of the week with that, and I know I'm going to make X amount of money, very good money for the year. So that's how I look at that, and that's what I do with that particular system that I use. So the next thing I hear so much about, and what I look at, and I understand the reasons why people do it. However, people that haven't traded, very new to trading, are going to get absolutely killed when they do this. If you have someone that's pushing a system that's a 50-55% success rate, even maybe a 60% success rate, I guarantee that you are going to lose money and you're going to blow your account. The reason is this: on paper, it works. On paper, it's a perfect world. When we come to trading, it is a whole different ball game. So let's work on the 50-50 scenario. So you think, okay, I'm going to win one, lose one, win one, lose one. Unfortunately, it doesn't happen that way. The markets don't work like that. What is going to happen is this. You might lose 3, win 1. Lose 2, win 2. Lose 6, win 1. Lose 2, win 2. Maybe lose 2, then you might win 4. Next week you might win another 3. Then you might lose 5. It's not a fixed win-loss situation. And this brings us to the 2 main detriments that causes this to fail. I guarantee after you have had even 5 losses in a row. So the system that you are using, right, you have to follow the rules. You've developed the rules, or you've bought a system, or you've done education. The rules are there. You know what you're supposed to do. And this is what happens, guys. You get 5 losses in a row. I guarantee none of you out there on that 6th trade are going to follow the rules to the letter of the law. You're going to wander off. You're either going to leave it later to get in, or you're going to close it out early. That's what this little thing up in here is telling you to do to safeguard yourself. And that brings the start of the demise. Right? And that's what happens. Now, in a minute, I'll show you results of the pound AUD. I did a thing like that in 2016. I have a lot of rules and filters for the set time trades I do. However, back then it was working very good, and you could ignore some of the rules and filters. So the results I did, I come through and I only used 3 main filters, but we'll come back and have a look at that in a minute. So getting back to your banks of losses and banks of wins. So when you get a bank of losses, it destroys your confidence. Right? Then you start to want to change things. It's human nature. However, at the end of the day, it's not the banks of losses that's going to create the biggest drama that you've got to deal with. The biggest drama that you've got to deal with is going to be this. You've had a series of win-loss, couple of losses, couple of wins. Then all of a sudden you get maybe 6 or 8 wins in a row. And this little thing up in between here, it's telling you you've arrived. You're the man. You've got this game down pat. By the end of that last trade, you're starting to think, I can pay the mortgage off in 2 years, I can go on that world holiday, oh, I'm going to sell this, I'm going to put that into my trading account. You're thinking, gee, if I up the risk from 1.5%, 2%, I can jump it up to 4%, 5%, 6% now. All you can see is all that money that you're going to make down the track. This is what this little brain's telling you. It's taken over your whole thought dementia, your whole thinking process. As someone said, you become euphoric. You're now there. You've reached the top of the tree, and all those people that told you trading was hard, you can sit back now and say, they don't know what they're doing. I do, and I'm going to show them. Then, and believe me, this is what happens pretty much down the line. You've got yourself into that dreamland, shall I say, state of thinking you are now the top of the world. The next trade that you take loses, and by this time you've either added more money to your account, you've increased the starting risk per trade, you lose the first trade. That's all right. I know, I'm got it down pat. 1-0. You take the next trade and you think, oh, well, up the risk a little bit more on this one. I know what I'm doing now, it was just a bad day. the second one loses. So now, that puts a little dent in the ego, and all of a sudden, out of those two trades, you've probably, where you're getting a stop loss that maybe, for argument's sake, was $200, you've just had two $300 stop losses. So then we come to trade number 3. So trade number 3, you start out and you still believe that you're invincible, that you've got it right, and you know this game down pat. Still keep the risk up, you lay into it, and this one is where you're going to want to waver outside the rules. Something's going to happen in it and you're going to say, oh, if I double the position I've got here, that'll make up on this one, it'll make up for those last two trades, I'm laughing. So, at some point in time, you load up the trade. The minute that you load up the trade, everything turns pear-shaped. Then, all of a sudden, it gets worse and worse. Now you're prompted to do two things, and this is where the next worst thing that you can ever do is averaging down on a losing trade. So you believe now that, oh, it's down, I'm going to make my stop a little bit wider. Cardinal rule number 2 that you've broken. And you're going to increase your position so that when it comes back halfway, you're still going to come out of it and you'll be still looking good. I guarantee that position is going to go straight through and right through where your final stop is. That trade has probably now cost you $1,000 in the stops. And that, guys, from there is where 90% of people lose their trading account. That is what happens. Trading accounts don't normally get lost from continually losing trades. Trading accounts get lost after you've had a series of good wins. When you have thrown the rules and everything out the window, your thought process, as I said, is paying off the mortgage, going on the holiday, buying the new car. You're thoroughly focused on that. The market has changed. It's not doing what it did the last 2 weeks. The liquidity providers are not going to let a market do the same thing week in, week out. I guarantee that. They are there to survive forever and a day. That is what they do. That is their job. It's $1 billion a year industry. They are there to make sure it doesn't do what it does 3 weeks running. And so the story goes. So when you get to that stage of that massive win, that actually sorts out the traders from the losers. It's not the working out strategies, handling losing trades, it's how you handle after a winning week, 2 week, 3 week period, a month period, or whatever it is. That's what sorts you out. So now I come back to this 55, 50%, 60% success rate. And it is promoted mainly by two groups of people. A is any broker-sponsored education that you receive, I guarantee will fall into that 50, 55% range. The mass educators that are the world acclaimed, we've taught 300,000 people to trade, we're the biggest in the world, we're the best in the world. They promote strategies that are around that 50, 55%. They can show you on a spreadsheet how all those trades turned out. This trade, that trade, this trade, that trade. And you believe it because you don't know any different. Why do they like to promote that? Well, there's two reasons again. Firstly, we see everything now in education is for free, or your broker puts out free trading seminars to help you. I love that one. Why do you think they want to help you? How do brokers make their money? They have 4 income streams from a losing trader and 2 from a winning trader. They're going to help you to be a 50% successful or less losing trader. The reason mass educators love that is as soon as someone rings up to complain that your strategy doesn't work, the first thing they're going to say is, did you follow my rules? And I know for a fact that you will not follow the rules because you get sick of being stopped out too many times in a row. They have got the perfect out, the perfect excuse. Now, furthermore, when it comes to education and background deals, and this is a part of FX that I really don't like, I detest and I steer away from vehemently. The majority of these guys, and to me they're no more than a scam. They sign you up through a broker of their choosing. So their specific strategy or whatever has to work through this broker. It's best for you, they tell you. It's best to do it that way. The main reason they do that is every losing trade that you take from when you start trading on, they're going to receive part of that losing trade that you're taking. So for them to keep income coming down the track after they've given you a small amount of education for free and then tried to suck you into paying an exorbitant amount of money, which a lot of people do, and I have a lot of people come to me that have already been there, done that, and I know what goes on, I've seen it. They then continue to collect a big proportion of your losing trades. So it is in their best interest to promote trades that are 50% success rate, so they know you're going to have lots of losing trades, and it guarantees them an income even if they can't con anyone into taking their courses. I realise this is negative. I'm not trying to put other educators down. However, I'm warning you, this is what happens and what goes on. Okay, so let's just come through and have a look at the pound AUD spreadsheet that I was talking about. And this is what can happen on a 60% success rate. You think you're safe with 60%, but this is the sort of thing that goes on, okay? Okay, so this is the pound AUD, and this was in 2016. Normally I use around 8 to 10 filters on the trades to filter them out. So as I said previously, all I did was kept 3 particular filters in there and had a look at the year as it was going through. So just on a quick run through, we have got 81 trades, 82 trades, 30, so that's 50 winning, 50 out of 80 is roughly 60%. We started off with an account value of $20,000. We haven't compounded or increased at the end of every month where I normally increase account to work out risk. We're working on 2.5% risk per trade as a flat right the way through the whole year, still on 20,000. At that, it turns into 81,000. Right, so that's 400% for the year with a 60% success rate. That just sounds wonderful on paper, doesn't it? You know, you wonder why we can't make money out of trading. Right, so now let me show you exactly why you can't make it. Let's just do this. And I want you to sit there and really think about this. And this is what I'm saying. You started off the year, you got 3 in a row, right? You're thinking you're pretty good. You got 3 losses in a row. A win, a loss, a win. Then, this is what happens. These are the actual trades using the rules and filters. This is what your trading is going to look like with 50 to 60%. I can tell you without a word of doubt that by the time you get to there, you're not going to get the first winning trade. You're going to mess with that one. You're going to do something else with that one, and you're going to do something else with that one. So, all those losing ones were $500. You've just stuffed up a $2,500 trade, a $2,000, a $1,000. That's the difference. Right? Of course, the trades that I do are all 5 to 1 up to 8 to 1 reward to risk. So it means that you can get away with that very easily. When you start looking at 1 to 1, or I've even heard some horrific strategies that are 2 risk to 1 reward. There's no way you can ever dig yourself out of a grave with that. So you come down to the year, we don't need that anymore. I'm sure you're quite well aware that what you're going to be thinking there is going to jeopardize those trades. So then you get, exactly as I said, 1, 2, 3, 4, 5, 6, 7, 8, 9. Then you're going to say, I've got it all sorted out. 1 losing trade, 2 losing trades, a couple of wins, you still think you're right. Then you hit this. And a couple more, and then you hit that. By the time you get to here, you're going to be saying, this strategy is a waste of time. I've got to muck around with it. I've got to alter it. I can't do anything. Then this is what happens. Now, that also highlights that whole year. So let me just scrunch this up a little bit so we can see the whole year in a glance. Let me just put that up here, auto hide that. Still haven't got it in one. Pretty close to it. So, as I said about liquidity providers, nothing stays the same forever. It's bad there. People are starting to make money, so they had to change it. The ones that do the thing, nailed it, straight away they had to change it back, and so forth. It alters its peridium all the way through. A block, a block, a block, a block. And you'll notice the blocks are all about the same. So what that tells you is they swap logarithms, they swap what they're doing. This particular spreadsheet highlights everything and pinpoints exactly what I've said right through the whole video. I know this because I started trading in 1997, FX in 2004. All right? I'm not someone who's just fell onto this, done it for 2 years, even 10 years. 10 years is not long enough. If you get someone that's professing to be a guru and they've done 2 years trading, I just laugh and say, I wish you well and wish you on your merry way. But that's what happens and then goes from there. Alright, so that's about winds it up for this video. Just wanted to say hi. Look, it's a difficult world out there in education and trading. I do try to take a very realistic approach on everything and a genuine approach. If I can help you guys in any way, my details are on my website. Take care, safe trading, have a great day.